Okay, the red light is on. So this is Dennis Wilburn with the Active Trend Traders, and I want to welcome both David and Harlan from All About Trends, and this is how to make money trading stocks. And I hope everybody had a wonderful, wonderful Thanksgiving and are ready to start looking for the first signs of a Santa Claus rally, because right now it's been a challenge to find it. And if you're going to have stocks for us to review, please hold on, because I don't want your stock request to get overshadowed by some of the other comments that come in. So Gary, I've got that one. I will write that down. So Harlan and David, how are you guys doing?
I'm doing well. How are you doing, Harlan? You hanging in there?
Yeah, kind of hanging in there. A little under the weather, but I'll rise to the challenge.
And so, yeah, Harlan's got the crud. He got it from his kids. Those are the and I mean, that's exactly what he said. He got the crud, and so, but I think it has more to do with where he lives. You know, he needs to come closer to where the palm trees are,
Exactly.
and the sunshine. So I want to welcome everybody today. We got a lot of cool stuff to cover today. I want to remind everybody that, anytime we present, when we're not making any recommendations for particular buys, we're just sharing what we're doing in the market, and that all that we do present is for training purposes only, and that I strongly urge, and I know Harlan and Dave do the same thing, that we urge you to first paper trade any new method prior to the risk of your own personal capital. So do you guys still paper trade any when you're testing out new things?
A little bit.
Okay.
A little bit. If we see something new that constantly shows up that isn't our forte, I kind of observe it and I kind of watch it and I kind of look back and say, is there any validity to this, or is this just a one-off?
Yeah. Yeah, and so I basically I love to paper trade to kind of test out new stuff. So that works really well. I want to remind everybody that David and I will be in Orlando, Florida, February 5th through the 7th. And if you know or you are in that area, please come by and say hello to us. We're also looking to, if you have a meetup group or you have an investor group, we would love to be able to come, drop by and just talk to you guys about the art and science, or the art of trend trading. But we'll be down there in Orlando. It's going to be at the Gaylord Palms Resort and Convention Center. And they'll start advertising that coming up here shortly. And this is just a reminder that Dave and I do love to talk about stocks. And the thing about it is we have the capability, no matter where your investment group may be or your trading group may be, we can tap in. Over the last couple of weeks, I've done some, I've got one presentation called if you want to catch big fish, you have to go where the big fish hang out, and it's about primarily about IBD quality stocks and what some of our research showed us and how we sort through the list and get through down to the best of the best. And but I was able to do a presentation this past week for South Denver meetup, and I just want to thank Jorge for giving me that opportunity. And a couple of weeks ago before that, I did one for the meetup in Delaware. And the night that they came out for that meeting, it was cold. It was Minnesota cold there, Harlan. So anyway,
But you didn't have to go experience it though physically. So
that's
cheating.
I was sitting here in my my Northern California office and talking to them, but I mean I felt the cold. I mean and after living so long in Hawaii, I'm not a cold weather person. I mean, my hat's off to the folks who can live in the frigid tundra. But David, I know that the frigid tundra isn't for you either, right?
Did we lose him?
I don't know.
No, definitely not. A drive up to Tahoe for the weekend or something is about as much as I'll do.
Yeah, that is one of the things I like about living in when we used to live in Southern California. You'd do an hour and a half, 2-hour drive up to the snow, build a snowman, and then drive back down to the beach where it was 85.
Exactly.
Anyway, let's get on with
fair weather.
You
guys are fair weather seasonal people.
No, non-seasonal.
non-seasonal.
Yeah,
right?
yeah, that's us. So let's get on with the update today on the market update. This week it's been kind of interesting, and Dave and I were talking a little bit about this. Going in, the indexes themselves have been just on this tear since the 15th of October, and they keep pushing higher, pushing higher, pushing higher, and the last time we met 2 weeks ago, I was saying, is the market running out of momentum? We're pushing these new highs, but we're getting some divergence on the weekly charts. Is this going to be exhaustion? Is this pop and drop on the Russell? And there was a little bit of that. But one of the things I noticed is that, this may be the major issue that is keeping the U.S. markets up and growing is basically what's going on in the international economies. Some of them are really struggling. They're trying to prop them up through governmental interference. And so is that pushing investors to the U.S. markets and therefore continuing to push, our markets higher? So the S&P, new highs, showing resilience. It did 2 days down this week, down to the 8-day moving average, just below it actually. It broke the 8-day moving average, but then rebounded. NASDAQ 100, new yearly high again. And it's only 11%. Isn't that amazing? I never thought I didn't think I'd ever see the day, but 11% away from its all-time high at just over 4,800. Now, yes, it's taken 14 years to get there, but I find that astounding. And then the Russell. Is the Russell starting to play catch-up? We've had a couple of really nice moves on the Russell this week after it kind of consolidated a little bit. And by the candlesticks the Russell was showing, it really looked like it was going to fall down to the other, just slide all the way back down to its support, or at least get a 50% retracement. And it got about 30% and then bounced. Here we are on one of my favorite indicators, which is the percentage of stocks on the NYSE above their 20-day. As it turns out that this consolidation here turned out to lead the way to the really nice rebound that happened on October 16th, and all the indices came up, hit the upper level, rolled over, and it rolled over. However, the NASDAQ and the S&P did not. Partly that's due to what we found as we've been researching and using this indicator. What we found is that the weighted averages such as the S&P, the NASDAQ, which has some heavier weighting in stocks such as like Apple and Google, Facebook, that have kind of been doing okay. Especially Apple's been on a really wonderful tear here lately. Basically, those indices don't necessarily react to this, but for the non-weighted indices such as the Russell, the NYSE, this is fairly, gives you a pretty good indication that some of the internal strength tells you how many of the stocks. Okay, so like right today we finished at 50, or we're at 54.61. It's telling us that in the current rally, only 54% of the stocks are actually participating and supporting this this rally in the Russell and the NYSE. So just a little bit of good information on that. But
what else it tells you, Dennis? Not to interrupt, but when Dennis talked about divergence on the weekly, this is a visual interpretation of what that means. Sure, you see the indexes hitting higher highs, but yet underneath the surface, this shows you that there is a divergence underneath the surface.
Yes, that's exactly right, Harlan. And because what it is it's telling us that, there's not, that thing that there's not as many stocks that are supporting the run-up, even though
right, it's not as strong as what the headline number leads you to believe.
And I'm really glad you brought that up, because somebody was talking about that towards the end.
Because I've been doing a lot of work in this department.
And so, yeah, but
moving on.
Moving on, let's take a real quick at the S&P. As we say, we came off this low back here in October, and it has been running up. I'm questioning whether, I always start to wonder, we had a similar but certainly not as dramatic a move up back here in the August time frame, and it did this nice little rolling top that in reality I was anticipating this move to actually last longer and get a weaker rebound, but I was proved wrong, and that's okay because we then changed our stance. One of the things that is quite interesting is we're still working on, this megaphone kind of top here that tends to be a bearish type of implication. However, as long as it continues to run up, we're not going to argue with the market. Arguing with the market tends to get people whacked, and or at least our accounts whacked. And so we just bide our time. So what do we have today? As you can see, the anticipated divergence when it got back up to the old high has now been exceeded. However, we just still on the weekly charts do have a little bit of negative. Don't do that. Get my other drawing. There we go. We do have a little bit of negative divergence. The index is making new highs. However, some of the true strength indicator and even the stochastics and the momentum is not. So that can be considered kind of a negative aspect. And then what we see here on the weekly charts is our momentum started to bounce back, and we got a really nice bounce of momentum. Grew, the true strength indicator continued to go up, but now we're kind of moving sideways, and the indicators are doing what we anticipate them to do, and we're not trading the indicators. The indicators are just providing us a sense of what's going on under the ice, if you will. And so what do we have here? Momentum. Even though we're pushing higher, the momentum is kind of like stalling a little bit. I am not predicting a top. I am just, reporting this is what we're seeing. Let's go over to the NASDAQ NDX. NASDAQ, as I indicated, let me show you. There is the all-time high up here at 48.16. You can see that on a weekly chart. And the NASDAQ, this is a little bit of consolidation / stalling movement that we're seeing this past week. We got a really nice drop. It could be considered almost an abandoned baby for those of you who like candlesticks. So we are getting the abandoned baby here at the top, but where did it go? It went immediately just back up to the top of the trend channel line and the 8-day moving average, and then it's starting to bounce. Keep an eye on, as an early indicator, if we can draw in a little trend line here, if this trend line is busted and we get a reversal down to, it may just come down to bounce off of here, and then that would be an interesting, nice rally back into the end of the year for a potential Santa Claus rally. But I'm watching that trend line there, which can be seen on the daily charts. Is basically this, not that one. Here we go. Is this little move right here. That little wedge up under lower momentum is just something to watch out for. Does it mean that the market's going to go and fall out of the sky? The clues aren't there for that yet, but we are getting a little bit of negative divergence going on. So Jerry asked, if you look at the last pullback, we had a blow-off top reversal that could, and that could happen again. Yeah, Jerry, I tend to agree on that. And again, I'm looking at this. How did it respond here? And how is it responding here? Where, clearly we've slowed, but will this complete? And if it does complete, how far will it go on for right now, just a pullback to previous support? That's the way we initially look at it. Russell. The Russell for the year, this is kind of interesting, guys, is the Russell for the year is up about 1.7%. Which tells us a lot about the small cap, while the NASDAQ for the year is up approximately 22%. One of the things that's very interesting about that is, from a cyclical nature, is typically the first and second year of a second-term presidents in the presidential cycle. Typically, the first and second year, especially the second year, tends to be a little bit of a weaker market. But we've had two very strong markets in a row, and so will that add on in 2015 to even a stronger market? Because typically in the second term of a presidential cycle, a president's second term in the last 2 years, historically they've been kind of up markets and fairly strong markets. So we'll see what happens. But there's also a lot of other things going on cycle-wise in the market that right now for 2015. For me at least, gives me just a big question mark about, will we or won't we? But for one thing we will do, folks, is we will follow what the indications are showing us on the charts, because the price action is king. So any questions on the market review? And so, okay. I want to comment that interest rates will play a key factor in that. And so, yeah, Jerry, I think that will also play into the overall thing. And we also have to ask, I asked the question at least, is what about the underlying stability of our current government? But that's another topic for another time. So, Dave, are you ready to rock and roll there, buddy?
I'm ready to go.
All right. Where are you? There you are. You are live. I'm going to mute myself and answer any questions anybody types in.
Okay, thanks a lot, Dennis. And just looking at that chart where you had the number of stocks above their 20-day or below their 20-day, every time we've come down to that lower level, we've seen a rally. So that gives me something good to feel about, and it's being confirmed by what we're seeing in the charts. We're seeing a lot of nice quality long side setups that are building themselves out, these nice good tight pullbacks to areas of support, and with each passing day they just keep getting better and better patterns. So I think we just need ideally another week or so of sideways digestion here, or more pullback, and then we could have a nice little Santa Claus Rally after that. We'll see. But that's what it looks like to me. So let me just go through some of those setups here. Just through a quick review of our trading plan. We don't chase stocks. We let them come to us via orderly pullbacks, which I'm going to show you here in a minute. We buy support. We sell resistance. We do the opposite when we're shorting. And we just look at the charts like you were saying, Dennis. We don't get into the news and the headlines and chase stuff. It's just about what the charts are telling us to do. So what do we look for in charts? Uptrend patterns and how to trade them, downtrend patterns and changes in trends. And lately we've been talking mostly about upside patterns, and we're going to do that again this week because that's really where the bulk of the action is, and that's how the market speaks to us, and that's what we want to stay focused on. So just a quick review here is Exact Sciences. We featured this 2 weeks ago in the webinar. We had this stock that's in this very nice uptrend, as you see by the green lines, pulling back in a very orderly manner. Got really tight here, and then it launched higher, and just yesterday our subscribers locked in a gain of over 13% in that trade in just over a little bit over a week. So that's exactly how our service works. We find stocks like this that are confirmed uptrends that are pulling back towards areas of support, lateral support here at the blue line and the 50-day moving average, and then we take them as they break above this pink line, and we lock down our profits as they get closer to a potential resistance level. So that's how we did with that one. And then here's NetSuite, which is a very nice pullback here. Now it technically triggered today, but you can see the volume when it did so wasn't all that impressive. So we elected to lay off it for now, but if it does back test here a little bit and do another retest of this blue line, we'll definitely be taking a look at it. But you can see here again another stock that's in an uptrend, trading all above the 50-day moving average. Had a nice gap up here on earnings, and then has pulled back in a very orderly manner. The stochastics are a short-term indicator that we use to judge whether a stock is overbought, which is up here in the 80 level, or oversold down here in the 20 level. So we like to see the pullback coinciding with the stochastics being at a low level here. So we have tons of setups like NetSuite and Exact Sciences on our newsletter. So it's just a matter now of them triggering, and it's been an interesting market. The indexes are up, but yet a lot of stocks are not going very far, and pretty much everyone I talk to is having trouble making a lot of headway in the market. And right now cash really has been the place to be, because remember, cash is a position, and sometimes that's the best way to outperform the market. I mean, I know Dennis is all cash. We only have one current position right now, but we do have a ton of really good looking setups here. So it's just a matter of the pullback completing itself and then triggering, and it's probably going to be one of those situations where when one goes, they all go. So that's kind of what I'm seeing. So if you want to take a look at that and see everything that we're looking at, we have a 15-day free trial. Harlan did an outstanding job putting together these really cool videos now. So most days we're going to be doing videos inside of our newsletter. So it's not just reading an email or going to a website and reading reading copy on a website. There's actual videos where Harlan walks through what's happening on the charts of a couple stocks, and just kind of like what I'm doing here. So sign up for the 15-day free trial. You get immediate access to all the stocks on our watch list. You get immediate access to today's cool video that Harlan put together, and you can start trading these stocks in tandem with us. When they trigger trades, we'll send you an email that we're buying so many shares of this stock at this price, and we do the same thing where we're locking in profits or if we get stopped out. So it's really easy to trade with us, and with the videos, it's really simple now to get a lot of good education about the setups and how they work and why we use them. So really encourage you to do this. This is an excellent time to do it, because like I said, when one goes, they're probably all going to go, and we're getting close to that potential Santa Claus Rally where we could have a really nice good couple of weeks here going into the end of the year. So I think that's it, Dennis.
David, thank you very much. Yeah, like you said, cash seems to be a really great place to be right now, and just let the charts take us back into the market as necessary. A couple of people asking some questions on some active trend trading rules, and so please shoot me an email on those, and I'll be glad to address those. Because now I'm back at the mic and I can't type anymore. So let's see what else we've got going on here. I am going to, this afternoon or this morning, I'm going to let the video continue to record, and this is at the request of several members. Let the video continue to record as we review individual stocks. Some folks have said that they really would like to see the review of the stocks, and so in honoring that request, we'll go for that. David, here's where we're sitting. As I said, I'm basically flat. The market are totally in cash, except we are continuing to do the Tesla demonstration trade. November, as you said, so many folks, November was such a choppy, challenging month to try to in trading, and we paid our rules, and so we took a slight hit in November, but we've started to reverse that in December, which I'm really pleased with. And so here's our year-to-date performance. We're up 26.5% in the margin, 53% in the IRA. And the reason why there's a delta here between these two is at the beginning of the year, we started the timing service in 1st of June. And we were using this margin account. My trading research partner and I were using this to trade various other, some other, we're testing and trying some things out. And so, but once we switched to the trading timing service, we started trading this exactly per what we were, the alerts that we were sending out. And so that's what the difference is. And so our objectives with the system is 60% winning trades with a yearly return of 40% or better. And so we're really quite pleased with that. I want to say thank you to the active trend trading members for being patient over the last couple of weeks. I have been doing some training on myself, and I'm really pleased about that, to get into the guts of being better able to recognize the internal strength, partly what Harlan was talking about, on the indices and individual IBD quality growth stocks. And one of the things is, if we better understand the internal strength, and because the chart itself may be looking just absolutely solid, like this is exactly where we want to jump in with either a breakout or a pullback, but sometimes the internals, we have to have a way to look under the hood to make sure that, well, are the internals, the momentum and some of the other items, what's going on there? And so if we better understand the internals, and the internals are actually, have turned negative, we may not want to take those breakouts, or we may not want to take that bounce trade, because the potential, and while nothing's absolutely 100%, the potential of that particular trade is higher for failure. So that's what we've been doing, and we are kind of, the site has been a little bit under construction, and we've been holding off on sending out a lot of alerts and that kind of stuff, because we've been applying this new criteria to the already stringent criteria for the IBD quality growth stocks. So our motto here at Active Trend Trading is we help clarify, simplify, and multiply. And again, Active Trend Trading has been enhancing our service over the past couple of weeks, and we're launching a lot of stuff this week. We launched last week the early warning alerts for already Active Trend Trading members. But we're going to be able to enhance our watch list, introduction of the early warning alerts for index ETFs. For us, what that meant was, it takes a heck of a lot of time to go chase down and find good stocks to trade. But there's some opportunities in the index ETFs, both the non-leveraged and the leveraged ones, that have been astounding. And my trading research partner has been trading a prototype of this for the last 4 years, and this year he has done, just amazing. We'll get to that in just a second. We're adding for premium and early warning alert members text alerts for both get ready to trade, but also secondly, here's the position we are entering. And then we're going to be providing affiliate opportunities are available. So if you would like to become an active trend trading affiliate, just send me an email and we'll get you set up. And through our regular premium price for just the active trend trading service, that includes a training every Wednesday night, and the recordings is $49.99. But we are, through the end of the year, we're offering that at 40% off, $29.99. If you have happened to sign up at the $49.99, just send me an email and say, hey, I want the deal, and I'll be glad to extend that to you. And then this offer will be available starting at 4 p.m. Pacific time today. Lastly, here is the early warning alerts for index ETFs. I looked at Mike's research on this, and we just found this is very uncanny. The accuracy on showing where the market bottoms are, or where tradable rallies within the indices happen. It was greater than 80% winning trades over a 12-year period. And like I said, this is designed for the really busy person who doesn't want to necessarily be chasing all the stock. It is a patience type service, because there typically have been on average 3 to 6 trading opportunities per year. Mike's trades, and I've listed those down here, he's traded the 3-time leveraged TNA and 88.2%, and this is, I'm not representing this is what, everything's, is done every year, but non-leveraged return would have been 29.4% if you were trading IWM, which is the ETF for the Russell. The Russell itself, when I wrote this chart, it was only up about 1%. Now it's up almost 2%. So it's a very interesting thing. I encourage you to go to our website. If you want to know more about this, please just run over to our website. Actually, you can go here to the YouTube channel, and you can get a little 10-minute preview of the how to trade index ETFs with the early, and this is just a 10-minute preview. And if that is of interest, you can go over here to this and just click on this button right here, and it'll give you the full hour presentation that both Mike and I did on all our research and all that kind of stuff, because I know, hey, I'm an engineer, I like research and I like data. And here's what we're going to be doing with this and this is a yearly subscription, and you get more information, and there's additional savings for both, if you do both services, and that'll be available starting tonight at this evening. And we do our first free training on this service in this system at 4:30 tomorrow, and that's Pacific time. So I'm out of breath. So David, Harlan, anything else with the markets? Because I'm ready to start looking at some charts.
I think one thing I just want to add, I was at I went to Ken's meetup group on Wednesday, I guess it was, and he was talking about how one challenge that he has is always wanting to be in the market, and not being content with being in cash, and I would just encourage folks that, that's a thing I struggle with too, but really that has really been where it's at the last few weeks. It's just mostly being in cash, and it's not a bad thing to be in cash. I know it's not fun, we want to get up and see how our stocks are doing every morning, but we got to be patient and wait for the setups to complete themselves and trigger, because if we just go out and try to chase stuff that we see gapping up here, gapping up there, you're going to run the risk of giving back a lot of your hard-earned profits, and then when things do set up and do start triggering, you're not going to have as strong of a cash position as you'd like. So,
yeah, right on.
That's just my 2 cents.
Yeah, no, without a doubt. That's one thing I've learned in trading with Mike for the last, we've been friends and colleagues now for almost 6 years, and what I learned from him, and he went through the whole rigmarole, David, of, he was a futures trader, he was a day trader, he was, as he was trying to find his niche, and he moved from California back to Texas, around the Dallas area, and now he trades somewhere between 3 and 6 times per year. But he waits precisely for the alerts and triggers to take place, and then he moves in, and he's typically in a trade for 10 to 25 days, 30 days to account for the wash sale rules, and then he's out, and then he waits for the next one. And one of the reasons why we're offering that as a yearly subscription is because there are times when you'll go 120 days between alerts. And so if you're doing a monthly subscription, nothing's happening, you're going, and so, and you go, well, this isn't worth anything. You throw and it would be my luck if I had if I was a member of something like that, I would cancel my subscription like the week that the market turned around. And so
doesn't it seem to always happen that way?
Yeah, it's Murphy's Law. So
we've seen that all the time.
Anyway,
yeah.
At market lows, we've seen that, and the next thing you know, boom, 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 off to the races, and 2-3 months later, we're loving life because we stuck to our discipline, and we're patient, know what we need to see to take a trade.
Yeah.
And then the next thing you know, all those people come back.
And so,
look at the market as a guy walking uphill with a yo-yo. People don't like it when the yo-yo's on the downswing, but you got to understand the guy's still walking uphill.
That's right.
That's when you should be jumping on it, when you don't want to. Who wanted to buy in, the bear market at 2000, the market lows at 2009?
Yeah. So, exactly. And so, okay, hey guys, with nothing else, we're going to basically close the show right now, and for David, myself, and Harlan, we want to wish everybody have a great weekend. Keep growing your egg, and trade wisely, trade profitably. And again, have a really great weekend. And please remember that December 7th is a very important day in our nation's history, and many, many great men and women died on that day. So it was Pearl Harbor Day, and if you've ever been to the Arizona Memorial in Hawaii, you cannot go to that place without being touched. So as a former Navy commander with 23 years of service, I just want to ask you, please remember Pearl Harbor Day. So with that, looks like we got some charts to review. To answer a previous question, or one of the question is, so there's no confusion. Active trend trading and All About Trends are two separate services. While there are some similarities, there are some differences also between, and probably towards the end of this year, David will probably be doing another combo offer, I would think.
Yeah, I'm thinking.
Okay. And David loves it when I put it on the spot. But what it is, we've come together because, one, we love to talk about stocks, and we basically jointly support each other, and so that's how that works. I hope that answers the question. So let's take a look at some charts here. Okay, guys. I'll give you Ulta, XPE, MANH.
Okay, I have Alta in a couple of different places here.
Mm-hmm.
What was it? EXPE?
Yeah, Expedia.
Sure.
And I'll take FLT and GPRO if you want to.
Yeah, I don't have Expedia.
Okay.
I have FLT.
Okay, why don't you do FLT and I'll take Expedia then. So, David, are you ready with those?
I can start with FLT, sure.
Are you ready? Now?
Yeah.
Oops, hold on. And again, I will keep the recording going, guys. And please just keep, with regarding the charts, guys, because we have a lot of charts to get over, brief, succinct, and to the point, please.
All right, so FLT, we featured this trade a couple weeks ago. We had a really nice nice pullback here, and it launched. It was one of those sneaky ones, though. It launched like 5 minutes before the close, I think like 2 Wednesdays ago. I remember it well, actually. So we weren't able to issue alert on this because by the time we got the alert out, you wouldn't be able to do the trade because it was literally 5 minutes before the close, and then the next day you saw what happened. So, but it just goes to show you, again, here's a stock that broke out initially from this green line here and then went nowhere. And because look at the run it made. It went from 122 to 150, and rather than buy it at 150 after it's made a 28 point move, I'd rather wait for it to digest a gain here and pull back, which it did. It's just unfortunate the timing of the trigger, but it was a great setup. And now you can see, it's sold off back, came back down, tested support, hit the 50-day, and then it's getting a decent lift from it. So that's that one. And now the other one was Alta.
Yeah.
Okay.
And if you have FLT, do that one also, Dave.
I just did FLT.
Oh, sorry.
So this is Alta. So as you can see, it's gapped up off of earnings today, and it has done nothing but pull back, which is kind of par for the course with stocks right now in the market. It's really difficult to make meaningful headway. I'm going to show you a different chart of Alta now. This is what it looks like in an overall uptrend channel. So you can see it kind of got closer to trend channel resistance here and has spent pretty much the day pulling back here. So again, it's just, it's a really difficult market to make headway in stocks right now, and it's not going to be like this forever, but this is the danger of chasing gap ups because we want to be invested, and we don't like being in cash. And look, Alta's making a big move off earnings, so let's go in it this morning. It's just going back to what I was saying. It's just really important to be patient and let them come to you. And we've got so many great-looking stocks that are setting up that way that there's no reason for us to go out and chase something like this right now.
Yeah, without a doubt. And so, did you have MANH?
I don't know.
Or ALXN.
I'm pretty sure I've got ALXN somewhere. Maybe.
And if you don't, that's cool.
Maybe not.
Okay. Well, let's pop back over.
Yeah, that one's kind of, just without looking at the chart, AOXN's just it's kind of a wide and loose stock, and again, it too was trying to clear some resistance earlier this week and is not making much headway, so that's probably why we don't have it on the list. There's just really no pattern there for us yet.
And so
a lot of those bios have been doing that. They've been wide range days, and you just can't. Yeah. You buy the strength and you go, oh, that's it, I got to jump on it, and the next day you're like going, why did I do that?
Yeah.
So, ALXN is a really good example. Its daily ranges is like 5 points a day.
Yeah, and Illumina's like that as well, and Jazz. They're just, they're just not, like I showed you with Exact Sciences and with NetSuite and with FLT, we want to see nice, orderly, tight trading on the chart, versus, particularly on the pullback versus, this up 3, down 2, back and forth, roller coaster ride every day.
Yeah, and one of the ways you can really, if that's why I always just really encourage folks to do a couple of things. One is don't just look at your charts on one time frame specifically, because that one time frame is not going to necessarily give you, trying to kill this thing, is not going to necessarily give you the real essence of what's going on. Go to the other
time frames and frequencies.
Yes, thank you very much. I don't multitask nearly as good as I used to. Let's take a look at GrowPro. What's GrowPro trying to do? What?
Just one final point on that. Illumina is a great example of what you're just saying. On the daily chart, it's a roller coaster ride, but if you look at it on the weekly chart, it's actually pretty nice and orderly. But you have to be willing to stomach the intraday big trading ranges.
Yeah.
Why don't we pull a chart of Illumina
Okay.
right
Why don't
now,
we get on with some of the?
the
I appreciate it, Harlan, but we've got a lot of stocks to go over. We'll come back to it at the end. if that's okay. Let's pop out some of the rest of these, okay? GoPro, basically really nice, basically pennant type formation. That's for
Dennis, we got your desktop.
Oh, sorry about that. How did that happen? You like this is my granddaughter.
That's why. We know where your heart is.
Yeah, that was us in Hawaii this past in October, and in May she's going to be a big sister, which is really kind of cute. She's going to be a big sister because Brandon and Sharon are having another child in May, and it's going to be a grandson. Ugh. Anyway, here's what GoPro's doing. Basically, you've had a bearish cross between the 8 to 20, crossing below the 50. Looks like it's trying to round over. At the same time, this could be just basically a consolidation in a flag / pennant type longer term pattern. Looking over here on the weekly charts, the longer term trend is still up, but if we break this lower line, we're probably going to this line, which on these charts that would be equivalent to about the 100-day moving average. Volume is a positive. It is, been small on this current pullback. So will we hold this support at 71.44 and bounce up or not? Right now, each one of these levels of the moving averages reflects resistance. So it's I would just kind of let it form, and as you can see, the momentum here has gone kind of wishy-washy and not really a strong, like Dave was saying, this is so reflective of so many stocks that are out there right now.
It's just chewing you alive.
Yeah.
And look at every time it gets strong, what happens? When it gets strong, you go, oh, that's it. I'm going to jump in. Here it goes. It's going to take off and run. And guess what? You jump in, and it gaps down and rolls.
Yeah.
Over.
And
so it's just chewing your life back.
And so that's one of the things that, if you like Expedia, or not Expedia, but GoPro to the long side, there's nothing wrong with, trying to, time this bounce here off of this trend line or off of this support level at 71.44. But if it breaks that by, 15 to 25 cents, be gone. Be out of there. That's one of the things that is to minimize risk because you're certainly not going to take a trade here at the lower trend line and give it 7 to 8%. No. That doesn't work out very well. So let's see.
The other thing you can do is line up your bottom at 64.74. That's support.
Yep.
Line up your top at 100-ish. That's resistance. Where is it right now? Smack dab is a pickle in the middle.
Yeah. It is one of those where, let's see, did you guys do Expedia? No, you didn't. Yeah, you did.
No, I didn't.
Okay, thank you. Expedia is breaking out under average volume, and so it is moving higher off of this level. It is breaking to new highs, so there's your kind of your breakout level. And it's extending itself further and further away from both the 20 and the 50-day moving average. Eventually, and matter of fact, we're going to be covering this on our Wednesday night midweek market sanity check training, is about moving averages reversion and how they can set up some really awesome trade. But this is really far extended. Here was the trade originally on Expedia, which would have been either back here or actually on the breakout as it popped up and started running higher off of these moving averages. And again, it is moving.
But for those that buy breakouts, this has a better shot at it, than FLT did, because this one, unlike FLT, actually spent some time digesting its gains up there before, breaking out, yesterday. So it had, if you're into that, this has a better shot.
More structure.
Yeah.
Yeah. And it just a lot, this is almost like an inverted head and shoulder. Kind of.
No doubt.
And so it's got it's got some good potential. From this breakout, if you're just doing it from a technical standpoint, you're looking from about 71 up to 88-ish. That is about $17. And so from this breakout, there could be a potential several weeks down the road of a $17 gain from the $88 level.
So here's the big question to everybody out there. Now that it has broke out, what are you going to do about it? Are you going to chase it here? Are you going to buy it here? Or are you going to wait for an initial pullback to test old resistance that is now new support at 88.85? That's when I see this, I say, oh, I missed it, I'm late. Guess what? I'll just put it on the tickler file and, wait for it to pull back off its highs and stage an initial pullback. Because, a lot of these names that break out, they do that quite a bit. I think there was a study, 80% of them do ultimately pull back and retest the initial breakout zone?
Yeah.
I don't know what it is lately. It used to be.
Well, yeah, I think some of the recent stuff is somewhere between 60 and 70% do a pullback, oftentimes fully to, back to the original breakout. And so that's always a good thing, just to file away. And one of the things that, Harlan, you bring up a very important point. One of the things that, I hear people say all the time is, I missed this trade and I took it off my list, but if I would have only kept watching it a little bit, look what happened. But I forgot about it. And so,
right.
And we saw that when we were doing the study on the IBD 50 last year, 2013. DDD started out number one on the list in 2013. It fell off the list, came down, did some awesome bounces off the 200-day moving average, set up a traditional technical entry site, and then once it did its third bounce off the 200, it went on for over 200% gain in the next 9 months. So yeah, sometimes the ones you take off the list, yeah, they are dogs, but sometimes they're waiting to turn around and run better. So let's see what else I got here. Somebody asked about our buddy. You guys did a wonderful trade on Tesla this week. Tesla has now broken this support line here. Tesla is in a position where what I'd be looking for is any type of a rebound now on Tesla. Any rebound back up into this support area, back to the 200-day moving average. I'd be looking for that for a short setup for potential continuous falling. I do not listen to Jim Cramer, but on the Thinkorswim platform, they have little snippets when you go and check the news on that trading platform. And there was a little, just a real quick little video of Cramer doing his thing, and somebody asked him about Tesla, and he goes, "That's a cult stock."
Yeah, but you know what? See, that's the thing. I can remember back at the beginning of November when it was moving higher and it was easy to get emotional. He's like, "Oh, this thing is the greatest thing since sliced bread."
Well, that was what I was going to mention.
Oh, sorry. I jumped the gun.
Is that 2 months ago, he was, praising Tesla. Or maybe I should have started with the punchline. He was praising it as being wonderful, but then all of a sudden, bam, now it's a cult stock. And I kind of have to, I won't necessarily agree with them, but see this upside right here on Tesla? It was selling off, and I thought it was going to fall out of the sky right on this day, which was 10/27, shortly before earnings. This big green candle that you see right here, you know why that was a big up day? Is because Elon Musk twittered, he did a tweet, out to the world that, oh, by the way, we actually set a record last quarter in the number of vehicles we sold. We just miscounted them. And that started me scratching my head, going, how hard is it to count cars? And so after we got this,
especially when there's only 10 to 13,000.
And after we got this sell-off here, I was looking on. This would have been Tuesday. well, and I was watching the after-hour news to see was Elon going to do another tweet that would try to rescue some of this. So right now I'm looking at Tesla for potentially going short, and also I'm protecting the value of the Tesla shares that I currently own. So let's see. Which one, guys, did you want to hit on? David, you had I'm switching my chart back to you, or my screen back to you, because there was, what stock did you want to chat about, Harlan?
I'm not
Gosh, it escapes me.
Oh, Illumina.
Illumina. There we go.
Yeah, Illumina.
I don't know where that is, but
Well, here, I can pop it. Just give me the
ILMN.
Hold on, now I got to switch back to me. Okay. ILMN, is that correct?
Yep.
There you guys go.
But we got your opening page.
There you go.
Yeah, but we have your Dennis. There it is. Awesome.
There is a little lag.
Sorry. The only thing I want to really point out about this is what I alluded to earlier, is these big average daily ranges. Look at today's range alone. I mean, the stock opened at, let's call it 193, ran up instantly to 106, and see, this is where you can get sucked into this. It's almost as like if you're watching football on Sunday, where the offense tries to flinch to make the defense go off sides, and then they get a 5-yard move off of that. That's what it's kind of like what you're seeing out there with a stock like this. You know, it's up, goes up 3 points right at the open, and it's easy to get sucked right into that. And then what does it do? And here it is. If you would have got sucked into that emotional move, saying out of fear of missing it after you already missed it, right? You know, here you are, you're already down 6 points. And that's just today on this stock. But you can also see here's a double bottom, or excuse me, a double top.
Yep.
Maybe in play.
Exactly. And what I'm doing is I'm just drawing this for the folks also so they can see. If you see this kind of price action, go here. Go to the weekly. Because the weekly, if you see this over on the daily, and you got, like that's, Harlan was absolutely right. This is wide and loose, sloppy. Go here to see if it calms gets rid of some of the noise. But if you go to the weekly chart and it doesn't, go next. I'm out of here.
Yep. When in doubt, stay out.
Yeah. So cool. Okay, folks. I think did you guys do ALXN?
No.
Okay. The reason I say that is because I have two screens going right now, and so I don't get to see your slides, David. Sorry, or your charts.
Okay.
And so that's why I ask about that other one. ALXN, kind of, similar type question. Yes, it is holding this original breakout. So let me get rid of this. There we go. It's holding this nice little break that it did over here, but it hasn't made much headway over the last 5 weeks, 6 weeks. And you just see this kind of choppy, kind of trying to make up its mind which way it wants to eventually go. And
we talk about this kind of thing all the time on our site.
Yeah.
You know, after you have a big run, like off the October lows, what do stocks tend to do to digest and consolidate that move? They either go sideways through time, and you're looking at it, or they even pull back like you see on the weekly.
Yep.
Back in March or April. So it's there's your sideways through time to digest that big move off to the October lows, but then you go also look at the weekly off of the March ramp up and melt up, and there's a pullback that is a digestion of that run in a pullback manner. So it's a great chart from an educational standpoint.
And so, speaking of great charts from an educational standpoint, I'm educated. I drew this in here. Yeah, this is where your real strong support is, and this is where we were talking about the tendencies of stocks to pull back to the original breakout. That happened on Alexian on the 17th of November, and then it's gone up, and it's moved nicely. I mean, it's gone up for 15 plus points, almost 20 points over that next week. But this took here, this process here took, look at that, 15 to 20 days for it to complete. Then it bounced. And one of the things that I'm looking at, Harlan, David, even during that bounce, look at the momentum really was not pretty. There was not a lot of, oh, gee, I really want this, there wasn't a lot of momentum to take this any higher. So it may digest in this area and then look for the momentum to kick back in. And we'll see if that happens. So, folks, Harlan, Dave, what else you got?
I think we're good.
Okay.
The only other thing, well, how about this? Let's do one real quick thing. NASDAQ 100 Index, NDX.
I know it well, thank you. I do, yeah. There you go.
When you look at the daily chart of it, what was that, 1, 2, 3, 4, 5 days ago, you had that big slam.
Yeah. Yeah,
big slam to the
had
downside.
this abandoned baby reversal signal.
Yep. Now pull a chart on, make note of that, folks, and pull a chart on Apple.
Oh, not L. That's one thing. Hopefully I'll be able to upgrade this computer shortly, and there we go. Looks very familiar, huh?
Imagine that.
Yeah.
What do you think that is? Apple makes up 13.3% of the NASDAQ 100.
Yep.
One stock, 13.3%. When that stock went through what some, I guess, are calling a flash crash or whatever, it immediately had an impact on that index because it is such a heavily weighted stock in that index. In fact, if I'm not mistaken, 10 names of the NASDAQ 100 index make up 50% of it.
Yep.
Just 10 names.
Yep.
10 names.
And that's
Google's 8%.
And like I said, because of those 10 names, if they are doing better than the rest of the market, or if they, let's say that's where the inflow of cash is primarily going, it can make it appear like the market is doing really, really good. But
right, and that's what we call painting the tape.
Yeah.
Whereas when you looked at Dennis's chart of percentage of stocks over the 20-day, it shows you that, yeah, underneath the surface, it's not all peaches and cream that the indexes are showing. And the reason for that is because they paint the tape with a few names to give the impression that everything is just perfect. So, and we see it. We see tons of names that we really like, but you know what? They're not going anywhere.
yeah. And so
that tells you something.
it does. And so for those of you who are Alibaba lovers, we're going to be doing a real quick, we're going to be over the next week or so, we're going to be, this, I think, guys, is really a really important stock to watch from a learning perspective because it's early on in its life and all the moving averages are starting to pop onto it and come up, and so it's a really clean chart to be able to study, to be able to go, okay, look at this here. We had this breakout here. Now we're getting another pullback, and here's the we're back into the magic fib zone, and so that's really I'm watching this to be able to provide some training sessions on this because for what all that Alibaba is showing us. I'm bullish on Alibaba, but I'm not ready to buy it right now for certain. There was one that we forgot, guys, and I'll get this for Gino. Oh, okay. Yeah, Manhattan Associates. It's breaking off after a brief kind of a consolidation. It's, this one is not in, it's not above 500,000 shares that I like to trade, but it is in fact moving higher. But how it works around this breakout will determine if you're already in this stock. Then hang on for the ride, and depending on where you got into the stock, if you're looking to get in, it gets back to that thing that Harlan alluded to earlier. Wait for a entry setup, because from my perspective, it's already it's broken above the 4081 level, which is the old resistance. So that would be a good place to plan a trade if you were looking to plan a trade, and see what it does there. I like the added volume, but that's about it. So with that, folks, Harlan or David, you got anything to add on that one?
No, it's I think you did well.
Okay.
It's exactly what I was thinking.
And so, okay, with everybody, have an absolutely fantastic weekend. This recording will be online and up and posted probably later this evening. And as usual, I will send out an email letting everybody know that it is ready to go. And so I appreciate everybody for showing up. Have a great weekend. Those who are members of the Bay Area Moneymakers, I'll be chatting with you tomorrow morning at 9 o'clock. So God bless everybody. Bye-bye.